Hello, I'm David Chaston with 90 at 9, brought to you by Interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news the Chinese are moving to remind Australia who is boss. But first, in the US-China trade talks, there are some suggestions that an outline of a deal is taking shape. And a widely watched measure of how much businesses are investing in the US fell for the fourth time in 5 months at the end of 2018, signalling firms are feeling less confident in light of domestic and global economic uncertainty. Overall, orders for durable goods rose 1.2% in December from the prior month, and that was far less than the 1.7% markets were expecting. And the first look at US business activity in February is positive. Private sector output growth is regaining momentum this month, with a good upturn in the service sector activity, more than offsetting the slowdown reported by manufacturing firms. In US house sales, that's excluding new build ones, fell 1.2% in January from the prior month. Sales volumes were down 8.5% from the same month a year ago. And in China, customs officials at China's northern port of Dalian have banned imports of Australian coal and will cap overall coal imports from all sources at the end of 2019 at 12 million tonnes, an official at the Dalian Port Group told Reuters. This could be a major blow for Australia, and the Aussie dollar fell sharply on the news, taking the Kiwi dollar down with it. The flash February PMI for Europe is stagnant. Although output across the Eurozone is increasing at a slightly faster pace, the rate of expansion remained timid. The manufacturing sector is dragging the overall economic performance, falling to a contraction this month. In Japan, the factory outlook is not looking good there either. Their manufacturing PMI fell to a 32-month low of 48.5 in February. That's down from 50.3 in January, mainly on the back of sharper falls for production and new orders. In Australia, the ALP has seemed to be joining the government in flagging that no action will be taken on changing the competition model for brokers. The clear conflict of interest situation is deemed less of an issue than the importance of brokers for overall market competition. The US Treasury 10-year yield is up 5 basis points today to 2.69%. Their 210 curve has held at 16 basis points. And gold is sharply lower today by $16 to $1,329 an ounce. US oil prices are about $1 lower today to just over $56.50 a barrel, while the Brent benchmarks are down to $66.50 a barrel. American government data showed a fifth weekly build in crude inventories and record local production. Meanwhile, concerns about slowing global economic growth weighed on the demand side. And the greenback has risen overnight, pushing the Kiwi lower by 0.75 cents to 68 US cents. While the cross rates were gaining on the Aussie, and now at 96.2 Aussie cents. And you have to go back to September 2016 to find a higher level. Against the euro, we're lower at 60 euro cents. That puts the TWI down to 72.6. I'm David Chaston. And that was 90 at 9, brought to you by Interest.co.nz.